Hey everyone, I'm Robyn Openshaw. I like to teach, especially Gen X and boomers who aren't digital natives, how to look at Bitcoin because Gen X, especially, it's moving fast. My friends, it's on sale right now. We really can't sit this one out because it's going to change the trajectory of our lives for good or for worse. So learn now and win, or sit on the sidelines and game theory will drag you in, like it or not, at a much higher price. Your pension fund manager or your wealth advisor is probably putting you in Bitcoin funds right now when you could own Bitcoin yourself. So let's talk about real Bitcoin versus Wall Street's synthetic Bitcoin, because there's a war going on right now, which is contributing to why the price is on sale. The volatility that we're seeing in Bitcoin has an interesting explanation. And if you listen carefully, you'll see how it makes holding and self-custodying your Bitcoin that much more important. That sound you're hearing, listen carefully because it's the old financial system breaking and it's the new financial system coming in. We need to stop staring at charts because things are changing so fast that the charts are failing us a lot, including in Bitcoin's history, which is like year 17. The old financial system has declared war on the new one. We'll be parsing this out for months, I'm sure, but what it looks like right now is Wall Street deciding we can't beat Bitcoin, so let's see if we can control as much of it as possible. For over 100 years, Wall Street has controlled the world by selling things that do not exist. Paper claims on gold, to the extent that some estimate 800 times more paper claims than there is actual gold, paper claims on silver, paper claims on real estate through instruments like CDOs, where we've built skyscrapers and office buildings on top of financialized paper instruments. But now Wall Street is looking at a real threat that they aren't going to be able to control. So the new story of pristine collateral strategy, the leader in the pack by miles of the Bitcoin treasury companies, has proven that Bitcoin can function in capital markets as pristine collateral underpinning it all. In fact, more and more banks are calling it that and stating their intent in 2026 to custody and lend against Bitcoin as collateral. And there's close to 200 public companies that have Bitcoin on their balance sheets. And so are Bitcoin treasury companies of sorts. Think about your Bitcoin that can't rust, depending on how you're holding it, can't be seized in a wrench attack, and will still be there in 100 years. It's not rusting. They let us depreciate our real estate for a reason because it actually is depreciating and getting older and worse. Compare that to what banks have considered pristine collateral until now, real estate, where tenants take a beating on the property, and so does the weather. I know this from living through 4 hurricanes in 4 years that cost me and my insurance over $100,000. And time takes a beating. Strategies products, STRK, it's called Stretch, is generating yield that banks can't compete with, creating a flywheel that pays you on real assets. By the way, I'm not advocating for strategy, and I have not invested in any of Strategy's instruments. I buy real Bitcoin. It is making the rest of Wall Street look really bad because we pay so much for Nvidia or Microsoft or Apple stock due to our expectations of future earnings. But Strategy is paying dividends on actual collateral that they're holding. Strategy has shown us a new open secret in finance that Wall Street is trying to figure out how to deal with. Companies can run a treasury better than a bank by using Bitcoin as the engine. And with less expense, fewer employees, and higher, more predictable yield. I'm sure you can imagine how that threatens the debt-based banking model. I'm like I said, not even a strategy investor, but I'm excited about the Wall Street shakeup. So big banks are counterattacking, flooding the market with synthetic Bitcoin, rolling out products that look like Bitcoin and feel like Bitcoin without ever actually touching real Bitcoin, which is what they did with gold. And sadly, they take advantage of investors who don't know the difference. So let's talk about how regular people like you and me can front run what looks to probably be the biggest wealth transfer in history. Let's talk about why synthetic Bitcoin is what the banks are going for, why Strategy's business model already planned for this. That's why they own almost 700,000 Bitcoin and they cannot penetrate it, the big banks. And three, let's talk about why, for the first time in history, their paper tricks aren't going to work. Not this time. So let's talk about the old system. The rails of the old system consist of central banks, think Federal Reserve, Bank of London, Deutsche Bank, huge banks often called too big to kill, like JP Morgan Chase. The derivatives market built entirely on betting, where nobody owns assets, only claims on assets. Fractional reserve banking creates claims on money that doesn't even exist. We're so used to accepting it that we just have an IOU at the bank. We don't actually own any money in the bank. You kind of get that loud and clear if you're like me and get canceled by three banks like I did in 2021, that we forget to take a look at what a doom loop it is. So let's compare it to the new system. In the new system, the new rails are blockchain based and equity based, not debt based. In this system, the asset is the settlement. You can do business if you have the underlying asset, Bitcoin. You hold Bitcoin, the value itself, not a claim against it, where there may be hundreds of times more of those than there are of the asset itself. And the system is propped up by the assumption that everyone won't make a run on the bank or a run on that collateral at the same time. For some years, Augustine Carson's at the Bank of International Settlement and the Federal Reserve, the old system, ignored the new rails, didn't take them seriously. Then it mocked them. It should surprise nobody that it's now fighting them. Strategy didn't just buy Bitcoin, $500 million to $1 billion a week. They exploited a glitch in the fiat system. They hold real Bitcoin in self-custody. Bitcoin that cannot have cotton candy paper bets placed on it like gold does. As it appreciates, it strengthens their balance sheet. They issue debt to acquire more of it. This creates a self-enforcing flywheel. Okay, constant incoming inexpensive capital, hard asset appreciation, and yield that doesn't just beat the debasement of the dollar. I'm sure you've noticed that inflation is not 3% like they say. It's a lot higher than that. And even other fiat currencies. But it's also better yield than over 99% of the S&P 500. Strategy is effectively becoming, whether it technically qualifies or not, a bank that doesn't need the Fed. Traditional finance is melting down, trying to figure out what to do. So the counterattack begins. If Strategy and Bitcoin keep succeeding, the banking model is in jeopardy. So of course they're going to fight back. What they've done so far is that the margin requirements on MSTR stock are raised by these banks to force liquidations. What JP Morgan Chase can control is to increase holdings requirements from 50% to 95% to lend on Bitcoin. And secondly, rumors are running rampant that Strategy could be removed from major indices like MSCI, which is a Morgan Stanley index, which would choke liquidity. Fact is, this has happened before and it didn't end well. Let's talk about the Hunt brothers who took on silver in 1980. So in 1980, two guys named the Hunt brothers bought up physical silver so much that banks did not have enough metal to back their paper claims. So what did banks do? They changed the rules. Margin requirements were raised to 100% overnight and silver crashed. The Hunts went bankrupt. The paper system, though, survived. And while this is small consolation, if you're still holding silver 40 years later, it's worth more than it ever has been. Big banks are now trying to run the same playbook on Michael Saylor and Bitcoin. And I can't yet prove that they first had a hand in getting Bitcoin's price way down, and putting the squeeze on Strategy wouldn't be enough. They need to suppress Bitcoin itself. So creating a fake Bitcoin supply, a diversion. Bitcoin has a fixed supply and rising demand, especially with the debasement trade being openly discussed everywhere right now. As in, what are you doing to protect yourself against money printing, quantitative easing, your dollar's getting worth less and less? So, how do you suppress the price of Bitcoin? Well, the clever answer is to create a fake supply. JP Morgan Chase has filed for Bitcoin linked leveraged structured notes. Okay. Big words. I know. These products do not buy Bitcoin. No Bitcoin is removed from circulation. No scarcity loop is created. Instead, banks issue IOUs, which are synthetic Bitcoin, creating artificial supply that meets real demand and suppresses price discovery if this is actually approved. And most of what JP Morgan Chase asks for, they get. This is exactly how gold has been controlled. You'd think that this would be illegal, but they do this kind of thing. They've paid many fines for doing worse. And it's in the end a buyer beware situation. I've had several people tell me that they own Bitcoin and that their financial advisor put them in it. And I don't want to offend them, but I say, your financial advisor can put you in shares of an ETF. So if the price of Bitcoin goes up, the price of your shares go up and you make money, but no way did your financial advisor put you in actual Bitcoin. You can own it yourself and very easily. I teach classes every Wednesday night. See the link below. It's literally the price of buying me and my co-teacher a cup of coffee. And we do one-on-one coaching sessions too. Not only you get a third free month, but also use the coupon code Robyn, my name's spelled with a Y, and get an extra $50 off. Do you think that gold is a free market? Gold tends to be the other debasement trade to protect you against inflation or what is very obviously your dollar or other fiat currency, the euro, the yen, whatever, falling in its purchasing power. Prices of gold, though, I hate to tell you, aren't set by physical supply and demand. Just like it's not the free market setting the interest rate or the price of money, it's the Federal Reserve, headed by a guy named Jerome Powell. The price of gold is set by the paper markets, the LBMA and COMEX. For every ounce of real gold, these organizations admit that there are roughly 100 plus ounces of paper gold traded. That's what they admit to anyway. Banks manage the price with naked short selling and rehypothecation. Now they want to turn Bitcoin into gold 2.0. If they can convince people who don't understand Bitcoin anyway to buy paper Bitcoin instead of real Bitcoin, because hey, it's a big company, I'm sure they'd stop them if it were illegal or sketchy in any way. They can manipulate the price indefinitely. I'm not making this up. This is what has already been done with commodities like gold and silver. But let's talk about centralizing and suppressing. When a decentralized system, think Bitcoin, gold, or silver, threatens the power structure of the banks, the response is always the same: centralize the rails, control the narrative, suppress the alternative. This has everything to do with the Green Smoothie Girl mission. That is my 18-year-old health and wellness brand. But I want to credit Crypto Casey with these comparisons where competition was squashed at the people's expense in these arenas in life. First of all, medicine. Flexner report comes out to get rid of naturopaths, chiropractors, herbs to protect the allopathic and the pharmaceutical industry. Education, where we went to factory style schooling, rote memorization, creative thinking was no longer encouraged. The food supply, industrial agriculture replacing the real food and the ups and downs of good and bad growing years, depending on flavoring and texturing cheap products like corn, soy, and wheat, which is most of what Americans eat now. And the money supply, the Federal Reserve after 1907, which is about as federal as the company Federal Express is. Bitcoin is the alternative, and strategy proves that it works. So they want to kill self-custody, independent thinkers, and real asset ownership, and con everybody into thinking that a piece of paper is the same thing as real Bitcoin, like they did with other assets like gold. And you don't have to. You can hold and own the real thing, but be aware the pressure to sell your Bitcoin to these huge players is going to be intense. But I predict they lose this time. This playbook isn't going to work on Bitcoin. With gold, supply could be hidden. With Bitcoin, every Satoshi is auditable on the blockchain every 10 minutes, and there's nothing these players can do about it. Bitcoin's fully transparent. It's usable and tradable 24/7. It's global. It's borderless, and it's impossible to fractionalize secretly. If JP Morgan Chase sells, let's say 30 million Bitcoin on paper, but on-chain data shows zero movement, the lie is instantly exposed. And hundreds of thousands of Bitcoin node operators know it. It is totally easy to adjudicate, and any average Joe who looks at the blockchain can see it. And now there are dozens of Bitcoin related alternative media outlets who will blow the whistle and fast. I know I will. Synthetic layers cannot survive in the light. Bitcoin, because of the blockchain, brings a big, huge flashlight to the party. The real war isn't Bitcoin versus the dollar. The real war is between the old system and the new system. And the new system, there's never been anything like it. Attempts were made for years, but nobody got anywhere near the network effect that Bitcoin now enjoys all over the world with hundreds of thousands of node operators. If Bitcoin becomes global collateral and these same banks are accepting it as collateral already, or they've announced they're going to do so in 2026, if you want to borrow in dollars losing value against your Bitcoin that over time is gaining value, same banks are lining up and announcing daily that they're coming into that game in the next year. Here's the bottom line. The banks lose their ability to create money from nothing. The only way to win, do not fall for ETFs, structured notes, derivatives, paper Bitcoin, buying a stock in something that invests in Bitcoin. The way to win is to hold the real asset. Self-custody matters. In a black swan event, or if these propped up banks fail, those holding paper claims will pay the price. Imagine wading through a bankruptcy proceeding, hoping that you get pennies on the dollar back. In everything except the Celsius bankruptcy related to early Bitcoin companies that went bankrupt, where Simon Dixon has shown up to every single Celsius bankruptcy hearing and convinced the judge not to sell the Bitcoin, the Bitcoin actually got sold and the lawyers got what little there was to squabble over in the end. Those holding keys will inherit the new system. We've never had a more robust asset to protect our wealth. Tell your friends about my channel because it's for smart people, but it's to introduce you to Bitcoin. It's to talk to you like Bitcoin is new for you. A lot of the people are in despair in our economy, and we're worried about our kids. But there's always opportunity in crisis. And for the first time in history, the people have an unparalleled weapon to win. What's hard isn't to get people to buy Bitcoin. It's hard to get people to take the time to understand it. And you're not going to hold on to it to have it change your life unless you understand it. So every Wednesday night at 8 p.m. Eastern, we teach and we focus on beginners. I've been doing this for almost 5 years. And we do one-on-one coaching too. Join us for a third month free with the link below and use coupon code ROBYN, ROBYN, capital letters, as a coupon code for another $50 off. And we'll see you on Wednesday nights. Some of our students say it's the highlight of their week. And while we are not financial advisors, we are educators. Those we've been teaching for a while have seen their lives financially change for the better radically. So check the page out about it, including what our students say, and we'll see you on Wednesday nights.